UK consumer goods business PZ Cussons says it's facing macroeconomic challenges and complexities associated with operating in Nigeria. This was contained in a trading update for its fiscal third quarter ending March the 2nd, 2024. Here's what it said today, which of course was yesterday. We are reiterating our full year 2024 outlook, having delivered improved L for L, that's like for like, revenue growth in Q3 on an improved volume trend. Nevertheless, the macroeconomic challenges and complexities associated with operating in Nigeria are significant, and there is more to do to unlock the full potential of the business. So let's get into it. Oyindamola Oyenuga is a consumer goods analyst with Meristem Securities. She joins us now to discuss further. Good morning to you. Thanks for joining us. So, we had a full discussion on this on the morning show. Can you speak to the importance of Nigeria to perhaps foreign consumer goods firms like a PZ Cussons?
Okay, for PZ Cussons, speaking to the numbers, just like the recent numbers that we're seeing, that's their 9M 2024 numbers. We saw how revenue performance played out. Currently, the company has operations in segments like in countries like Europe, Asia, and even in Africa.
Yep.
And from what we saw is that revenue performance was significantly better in Africa compared to its counterparts in Asia and even the European region, where performance was kind of subdued. For PZ, looking at PZ, a company as a whole, we see that Nigeria is quite significant to their operations because currently Nigeria accounts for about 25-26% of total group's revenue. So that's quite significant. And even looking at Nigerian markets just looking at Nigerian market, we currently have that population and that demographic advantage. So we're looking at it, we kind of have we have the market in terms of numbers, and that has really fed into what we are seeing in terms of their 9M performance. So for PZ Cussons, the group as a whole, Nigeria is quite significant, contributing about 25% to their total revenue.
All right, so we've established that. Now, this is my favorite part of the entire Q3 trading update, is the revenue table that they put up. So we extracted it from the update. Let's take a look at this. I thought this was Oyindamola, we could spend the next hour here. All right, so I wanted you to just taking a look at, it's like two stories in one, right?
Yeah.
So as you've already mentioned, you look at Africa, yes, third place in pound sterling revenue, 35.6 million. However, the like for like in the middle row there, 39.6%, whereas everywhere else, Europe, Asia, they're all down. However, on the foreign exchange reporting to the right, the biggest drop. So can you talk about the dichotomy or the divergence about what this table is saying?
So basically what we are seeing, like I mentioned before, the revenue was subdued in these other regions, and then Africa had like about 40% increase in revenue, right? That speaks to what has basically driven it, like other FMCG firms that we see in Nigeria, the likes of Nestle, Cadbury, UAC, and the likes of them. Performance this period has really been driven by, on one hand, we have volume increases, but we're seeing more of the price increases that have really supported and helped revenue performance during the period. And then on the other hand, where you look at the reporting part in terms of the foreign exchange, we're seeing the story quite different, right?
Ouch.
And this really links to the effect of the naira depreciation. For this period, this is 9M 2024, and that's like around February, and we saw naira trade around the levels, went as low as 1,600. So when you actually convert their naira revenue to the home currency revenue, is kind of lower. So it's like a divergent story in one, but it's that's what we're seeing playing out, basically.
The numbers always, I just love the story that numbers tell you. Everything's there. You can extract, interpret, and the numbers are there. So I want to ask you about currency volatility. I think you've already mentioned that. But looking at this quote, where they talked about their revenues, right? They essentially said revenues as reported FX rates declined, 23.7%, primarily as a result of the devaluation. So, which on average was 60% lower. So that is still a big story, yes? Currency volatility. Okay, let's go region by region. I want to talk about the impact of the pass-through effect, the pass-through inflationary effect of currencies. So they said here, In Africa, we've continued to increase prices in the quarter, seeking to offset significant FX-driven costs. That has to bite for a consumer. What do you make of that quote there, as far as them trying to head off FX cost-driven inflation?
So it's a struggle for many consumer goods firms in Nigeria, and what the step that they have taken is to hike prices or increase prices, reflecting the effect of foreign exchange and how inflation keeps biting in. And what we're seeing that translating into is them passing this cost to consumers, right, in terms of higher prices of goods and definitely feeding into the inflationary environment. So this is like steps that these companies have taken to try to, help their productivity, to try to help their profitability at the end of the day. So eventually the consumer is the one who bears the brunt of all of this, right? So the naira depreciation, the effect of the cost, how that, feeds into inflation. That's really the story.
Okay, again, it always blows my mind when a company gives a group outlook and it now says, but however, this depends on something from one particular country, right? This isn't being said enough. Where is it? So here's the on the outlook side. It says the group expects to deliver adjusted operating profit in the region of 55 to 60 million pounds, right? Unchanged from their H1 guidance. I love this part. Assumes no material adverse movements in the naira from current levels in the balance of the year. That's Nigeria's importance again, is it not?
Exactly, right. The FX is a significant thing. Well, the company has probably based, some of these, their outlook on the recent appreciation that we've seen in the naira and, things like that. In terms of, this just boils down to Nigeria constituting about 26% to the total group revenue. Will I say Nigeria currently, right, the dynamics of things, how that we still have that demand, the market is there, the demography is there, and so we're seeing many of these, FMCG companies, trying to take advantage of these opportunities. But on the other hand, you have the challenge, right? You have the challenge with cost, you have the challenge with foreign exchange, because Nigeria is like a consuming state, right? We significantly depend on imports for our, local production and stuff. So this really, we have that exposure to it, and these companies also have that exposure to it. So the outlook of things or how things will go forward will really depend on the level and the stability of the naira or the appreciation of the naira, basically.
That blew my mind. Everything is fine, of course, depending on whether the naira moves. Okay, I really do want to pick your brain on this because I thought this essentially was monetary policy in effect now. So outlook, not outlook, repatriation, right? So they said the group has made further progress in reducing its financial leverage as a result of ongoing repatriation of funds from Nigeria to the UK and its ongoing program to divest non-trading assets. Let's continue, because they continued along those lines and said that in the first 10 months of this financial year, the group has repatriated approximately 35 million pounds cash from Nigeria and expects to do another 15 to 20. So you're looking at about total 55, right? By the end of May, they still continued further. So this improvement has been underpinned. I don't know why they said fiscal policy, because I thought all this currency stuff is monetary policy. But anyway, underpinned by fiscal policy changes in Nigeria, providing improved access to US dollars, and by other operational initiatives enabling our Nigerian business to be self-funding. What does that say about what CBN has been trying to do in terms of clearing those backlogs? What do you make of that particular, the repatriation portion? So,
them being able to repatriate that much, that's a positive for them. But in recent times, we have seen that, the CBN has undertaken different policy actions, right, initiatives to try to curb the speculatory activities in the Nigerian foreign exchange markets, and we're seeing them plugging the leakages and trying to ensure that stability, and this has actually resulted in the stability of the naira. We've seen naira appreciate to levels of around 1,100 from around 1,900 levels, right? So this is well, let's say it's quite good, and it's something that has really played out in terms of the stability in the Nigerian foreign exchange market. But really, them basing their expectation of the naira on their ability to repatriate this much more by the end of May to the stability of the naira, we would say that, or I would say that it's quite dicey in terms of
it's risky.
Yes, it's quite risky, right? Because you really have to. Currently, what we have now, we've seen that stability, but also to actually see that long-term stability of the naira, and then when we start to see the naira appreciate, that would really link to the level of foreign exchange supply that we have in the market. And you're talking about foreign direct investment, them coming back into Nigeria. So that brings up the the question and the part where the fiscal policy comes in. We've seen that bit of the monetary authorities to try to address the situation currently, which in our FX market. But on the other hand, we also need that the combined effort from the fiscal authorities, to try to correct things in the market, addressing issues like security, which is like a major challenge for businesses here in Nigeria. So addressing some of these challenges, and even pumping money to more productive sectors of the economy, the manufacturing sector, healthcare, and even education, right? So for us to see that stability of the naira, and then for them to really expect more being able to repatriate more, that would really link to how stable would the naira be, how for how long we will see this stability, and all of that.
Thank you for that. Thank you for the breakdown. All right, so as you said, okay, so we got good news on repatriation, but again, two-sided coin. Shareholder returns, and this was kind of ugly. So here they said that shareholder returns have fallen short of expectations, predominantly due to macroeconomic challenges in Nigeria, which since June 2023 has experienced the single largest devaluation in the history of the country. And then I think we've got a quote from the CEO where he talks about what could happen in the future. I think he was talking to either Financial Times or Bloomberg. So that's what's his name, Jonathan Myers. Says we are evaluating our strategic options for our Africa operations. Nothing is ruled out. We see a number of tranches of potential value, whether that is to us or someone else. What's he saying there? Say a sell-off of the Africa assets?
So I mean, the news headline is that what we've actually seen is that due to the lower revenue, I mean that's reported in the home currencies, the home country's currency, right? We saw that decline in revenue, and so that sparks the question, right? Are they taking a cautionary stance, sort of because of the challenges that we are seeing? So down to the shareholders' bits and what's really happening. We saw how that foreign exchange losses during the period. I mean, this is not just peculiar to PZ as a company. We have other companies like Nestle, Cadbury, really raking a lot of FX loss. I mean, currently, as at their 9M 2024, that's for PZ, they have FX loss to the tune of about 100 billion, which is quite significant compared to where they're coming from in 2023. So this is a significant problem, and we've seen how that has affected the bottom line of many of these companies. And then now that feeding into the equity positions, currently PZ is in a negative equity position of about 46 billion. So it's a problem that we are seeing across the different players in the industry. Well, on one hand, many of these players have been able to, intensify their backward integration efforts to try to limit their exposure and, all of that. But on one hand, we still see many that are quite exposed to the FX market, and that's like a major share of, players in the FX market. So all of that just really revolves around how FX losses, and how that is really affecting their profitability within the Nigerian market.
Thanks for joining us. Really appreciate your time. I really do love doing this. The deep dives, these companies, they paint a picture with the numbers, and then we get analysts like yourself from you awesome guys at Meristem to break it all down for us. Oyindamola Oyenuga, consumer goods analyst with Meristem Securities. Thanks for joining us. Appreciate your time.